Agreed.
Okay, well, that'll close off our crypto update for this week. I'm going to share my screen and I'm going to talk about a company that should be no stranger to investors, as it's been in coverage in our Canadian small cap research for a number of years now. Okay, so GeoDrill. Now, what does GeoDrill do? They're a leading drilling company with a large presence in West Africa and an emerging presence in Latin America. The company operates a fleet of multi-purpose core, air core, grade control, and underground drills. Its total is about 98 rigs or units right now. The company's multi-purpose rigs can perform both reverse circulation or RC drilling and diamond core drilling, and can switch from one to the other with little effort or downtime. Multi-purpose rigs provide clients with the efficiency and high productivity of RC drilling and the depth and accuracy of core drilling without the need to have two different drills on site. GeoDrill currently has operations in 4 African countries and 2 South American countries. The company's rigs are support equipment also incorporate a fleet of booster and auxiliary compressors, which enable the group to achieve high quality sampling and operations to greater depth. Stock trades around $3.30, has a market cap of around 155 million, doesn't pay a dividend, may at some point in the future. But why is GeoDrill our star of the week? Well, up nearly 18% over the past the past week. I'll get into what drove up the stock in a second, but the stock is also up around 43% over the past year, and it is more than doubled since we were able to re-recommend it over the past 18 months to clients. Now, okay, let's take a look at the strong Q1 fiscal year 2025 numbers that were just released, which are driving the stock higher at present. Basically, record numbers across the board, generated record revenue of 48.8 million. That's 41% increase from the same period last year. Delivered record EBITDA, 13.6 million, or 28% of revenue. That's 104% increase over Q1 2024. Adjusted income or net income was the achieved net income of about 5.6 million, 12 cents per share, up from 4 cents in the same period last year. So very strong growth there. And they generated a return on capital employed, or ROCE, of 18%, return on equity of 10%, reflecting strong capital efficiency and profitability. Let's look at some more highlights from the quarter. Utilization was very strong at 75% on its enlarged fleet during the quarter, compared to around 65% in the same period last year. They strengthened their operations in West Africa and Egypt, repositioning rigs for continued growth, expanded presence in South America by adding additional rigs to meet strong customer demand in that market, increased the rig fleet to 98, adding 3 rigs during the quarter. Let's look at the balance sheet quickly. About 13 million in cash. Debt is about 13.7. It's a strong balance sheet, particularly compared to its peers. Likely moves to net cash by year end, pending demand and adding additional rigs, depending on the movement of that over the course of this year. What is driving these results? Well, strong new contract wins with top tier clients is driving revenue. You see 150 million in US and multi-contract wins over the past year. Significant wins. As you can see there, from some of the bigger names in the industry, the most well-known names, the Newmonts, the Barracks, the Endeavor Minings, a number of companies there that should be familiar to anybody investing in the gold segment. Let's look at the company's guidance or outlook here. Demand for services remains strong despite tariff concerns. Strong gold and copper prices continue to fuel demand for drilling services. The company primarily drills for gold. It has a pipeline of bidding, and that remains very active. On the conference call, I'll note that management stated it expects Q2 2025 revenues to be roughly in line with Q1 2025. We just saw those numbers. They were very strong indeed. Now, let's take a look at the current valuations for the companies. We can see here 3.5 times on an adjusted basis, EV to EBITDA, based on the 2024 numbers. 2.8 times forward looking, PE right now about 12.3. If we look at the 2024 numbers, look forward, it's as low as about 7.3 times. Our conclusion here, that record Q1 fiscal year 2024 results, they were driven by strong gross 28% and EBITDA 27% margins. A strong gold pricing environment continues to drive demand for drilling services. Again, they drill approximately 95% of clients that are exploring for gold. That's who they're drilling for. They continue to reinvest cash flow to grow its fleet, about 3.6 million of CapEx in the quarter, which expanded to 97 rigs, up from 93. It has one rig being rented right now. That gets you to about 98. Management again noted on the conference call that it currently sees the reinvestment of free cash flow into the business to be better able to use a better use of capital versus dividends or buybacks, given the demand that is facing that it sees in the near and midterm. We may see a dividend at some point return, but in this case, again, the better use of cash flow is to plow it back, buy more drill rigs, and get those deployed. Demand remains strong across all its main geographies, including South America, West Africa, that would be excluding Burkina and Mali, and Egypt. The company aims to continue growing its fleet across its geographies, expecting to cross the about 100 rig mark in the near term. GeoDrill has also recently established a company in Saudi Arabia with the intention of tendering new contracts in 2025. I'll close by saying clients will be updated shortly with our updated rating on the company, and there are final disclosures.
Yeah, the utilization with GeoDrill is always nice to see with the business, and exactly, I remember our
Very
previous
strong,
conversations with management, and when utilization's getting 75% or higher, that's when they're going to be trying to add some rigs, kind of in that range.
You're very profitable if your utilization is 75%, and you saw the uptick in EBITDA margins across the board, profitability. Even with the top tier clients that they have longer term contracts with, the margins came up, and you can see that when you have good utilization, and it's impressive profitability. And again, really for us, if you're buying drillers, it's the pick of the litter in that sector because of the balance sheet strength and the margin profile that we see that this company is able to generate. That quarter was strong. If they have another strong quarter, despite the growth in the share price, it looks like it still continues to offer some value. Again, that's against a strong gold pricing environment. If that changes, the company has some cyclicality for sure to the business. You got to continue to watch that.